You might be at that stage where you're thinking, okay, I'm tired of renting, but I have no clue what actually happens between I think I want to buy and here are your keys. So let's fix that. There are really 6 big stages that you're going to go through. And when you understand them, the whole thing goes from confusing and scary to, okay, I can do this. By the end of this video, you'll know exactly what happens first, what happens next, and where people usually get tripped up so that you don't have to learn the hard way. Let's start with step 1, getting financially ready before you ever step into an open house. This is the quiet prep work that most people try to skip, and that's why they end up stressed out later. Financially ready doesn't mean that you have to be perfect. It means you have a basic handle on 3 things: your credit, your monthly budget, and your savings. You're going to want to pull your reports and just look for surprises. Old collections that you forgot about, late payments that you didn't realize showed up, or accounts that don't even belong to you. I've seen buyers discover an old cell phone bill from years ago, holding their score down, and once it's addressed, everything gets easier. For your budget, look at what you actually spend each month. Include daycare, streaming, eating out, that gym membership that you keep but you don't use. A lender's going to look at your debts, but you need to look at your lifestyle so that your future payment feels comfortable. And for savings, you're planning for your upfront costs, your move, and a small cushion. You don't need to have it all figured out today, but you do want to have a rough picture before you talk to anyone. That leads right into step 2, getting pre-approved, not just pre-qualified. Here's the deal. A quick, yeah, you're probably good up to this price based on a phone call or an online form is not the same as a real pre-approval. A real pre-approval means you actually apply. Your credit's pulled, you upload documents like pay stubs, W-2s, or tax returns, bank statements, and we run the numbers through actual guidelines. That way, when you go to make an offer, you're not guessing. A lot of people hate this part because it feels like homework, but here's the simple way to look at it. If you can gather what you need for your taxes and your bank, you're 80% of the way there. Where do people get stuck? Bank statements with mystery deposits, like a big Venmo from a friend that paid you back in cash, or cash that you decided to dump into your account right before applying. We have to be able to explain where that money came from. So if you know you're heading toward buying, avoid moving large chunks of money around without a paper trail. Don't switch jobs or change how you're paid in the middle of this if you can help it. Going from a salary to a commission or contractor role right before buying can create extra hoops. Once you're pre-approved and you know a realistic price range and an estimated payment, now you're ready for step 3. Smart home shopping with your agent. Notice I said after pre-approval, not before. This is where you and your agent work together using your pre-approval as the guardrail. Instead of, let's look at everything up to some random price. You're saying, here's the range that actually matches my budget and what the lender has reviewed. Make a needs versus wants list before you start seeing homes. Needs are things like number of bedrooms, commute distance, maybe being in a certain school district. Wants are granite counters and a soaking tub. I've watched buyers fall in love with a beautifully staged house that checks 0 of their real needs and then feel heartbroken when it doesn't fit their numbers. Your agent will help you watch for red flags like obvious foundation issues or roof problems, but you're also paying attention to things like, how will my life actually work here on a Tuesday morning? When you finally find the one, you move into step 4, making an offer and getting under contract. This is where your agent leans on your pre-approval letter, negotiates price and terms, and helps you understand things like earnest deposit, inspection periods, and contingencies. From the lending side, once you're under contract, the clock starts. We'll order the appraisal, update your file with the property details, and recheck your documents if anything has changed. This is not the time to celebrate with a new car or a big furniture shopping spree on a store credit card. I've seen files go sideways because someone decided to finance a whole new living room set 2 weeks before closing. The lender sees that new debt on your credit report, your numbers change, and suddenly we're scrambling to make it work. So while you're under contract, think financial freeze mode. No new loans, no new credit cards, don't co-sign for anyone, and avoid big unexplained deposits. Once your inspections and appraisal are done and the numbers work, you slide into step 5, underwriting and clearing conditions. Think of underwriting as the trust but verify stage. An underwriter is going to review everything your loan officer submitted, your income, your assets, your credit, the property itself. They almost always come back with conditions, which are basically questions or extra items they need. That might be an updated pay stub, a letter explaining a job gap, a document that shows where a transfer came from, or an updated bank statement. This is totally normal. The faster you respond and upload what's needed, the smoother this part goes. Where buyers get frustrated is when they don't realize that new bank statements show new transactions, and new transactions sometimes raise new questions. Avoid doing anything interesting with your money during this period. If you do have to move money for a real reason, talk to your loan officer first so that we can document it correctly. Once the underwriter's satisfied, you get those magic words, clear to close. That leads to step 6, closing day and getting your keys. At closing, you'll review and sign documents that lock in your loan terms and legally transfer the property to you. You'll receive a closing disclosure that outlines your final numbers, including your total cash to close. A few days before, confirm with the title company or the attorney exactly how to send any wire. And watch out for wire fraud. Never trust random email instructions that don't come from the verified contact you've been working with. On closing day, bring your ID, follow the instructions you were given, and take your time reading what you're signing. After everything is executed and recorded, that's when you finally get the keys in your hand and you walk into your new home as the owner. Now, could you try to piece all of this together from 50 different blogs and videos? Absolutely, but it's a headache. That's why I put together a free step-by-step guide that walks you through all 6 stages, what to do in each one, and what documents you'll want ready so that you can move faster with less stress. It breaks this all down into plain language, and it gives you checklists that you can use with your agent and with our team. It's linked right down in the description. Don't let fear of the unknown or one past money mistake keep you stuck renting forever. Click the link in the description to grab the free guide or book a quick strategy call with our team here at Acre Mortgage, and we'll help you map out your personal path from thinking about it to keys in hand. If you found this video helpful, please subscribe. I'll see you on the next one.